One of the questions that we get asked all the time is how do we account for pass-through costs? And there's really two ways to do it, and I'm going to demonstrate that to you right now. The first way is that you include it as revenue, so revenue, and then as a cost under cost of sales. So what that looks like is right here we've got $2 million in pass-through revenue, so money that was paid from the customer to the agency. And then we've also got an offsetting expense right here for pass-through costs, right? So we've got $2 million minus $2 million, zero. Now, under this specific model, we've got $1 million in consulting revenue, we've got $2 million in pass-through revenue, and then we've got $400,000 in markup on those pass-through costs. So 20% of $2 million, $400,000, easy enough. This is a $3.4 million revenue agency. Under cost of sales, so these are going to be the variable expenses with generating that revenue. We've got, again, the $2 million in pass-through expenses. We've got $50,000 for contractors, $12,000 for web hosting. And so our cost of sales, our total cost of sales are going to be a little over $2 million. And our gross margin is going to be a little over $1.3 million. Then we've got fixed expenses. So these are the things that are not going to change. These are the things that you are going to experience in your agency, whether or not you generate revenue. We've got $350,000 in salaries, $30,000 in rent, $36,000 in software, $12,000 in office expense. Total fixed expenses, $428,000. $428,000 subtracted from our gross margin of 1.338 is $910,000. That is our net income in this agency. Now, what's the second way that we can do this? Well, we can net everything out and run it through this income line on the P&L. We see this in QuickBooks a lot of times with some of the other firms that service agencies. It's fairly common. So what they'll do is they will run both the income and the expense through this line on the P&L. So what we've done is we have zeroed out our pass-through expenses in this column. We have zeroed out the pass-through expenses, that's this line, and we've netted them against the pass-through revenue. So what does this look like? Well, we still have our $1 million of consulting income. We still have our $400,000 markup on those $2 million that pass through the agency. This is a $1.4 million revenue agency. We've got $50,000 in contractors, $12,000 in website hosting, $62,000 total variable expenses, so cost of sales. And our gross margin, lo and behold, same as the other way, $1.338 million. Fixed expenses, same, $428,000. And so this is also a $910,000 net income agency. Now, what is the issue with this? Well, a couple of things. Number one, this creates a little bit of a tax problem. Most agencies that we work with are S-Corps, and so I'm going to run through an S-Corp example, and it's going to be roughly the same if you're a partnership too, no big deal. So this is what an S-Corp tax return looks like. On row one, this is your gross receipts or sales. That's your revenue. Okay, cool. Well, what are gross receipts or sales? So if we go to the instructions to this form, enter on line one, gross receipts or sales from all business operations. When there's a whole bunch of exceptions, they don't really apply to this situation. But the key operating word here is gross. It's not net, it is gross. And so if we were going to report the gross income on our tax return on this line, that really needs to be this number, because this number is gross, this number is net. So if we're using this for our books, but we're using this for our tax return, what kind of problems is that going to create? Which is a really, really good question. Well, we're going to have books that look like this. And where do those books go? Well, usually you're going to use those books for management purposes. You may send them to a potential acquirer. You may send them to the bank so you can stay up to date with your covenants, that sort of thing. But in most of those cases, they're also going to ask you for a tax return, because the tax return is the most authoritative source of financial information that you can provide. Why is that? Well, it's because you file that with a governmental agency. So now you're in the position where you gave maybe a potential acquirer books that say 1.4 million in revenue. You also gave them a tax return that says 3.4. The next thing that you're going to get is a question. And then you're going to have to explain, well, we do this, and this is the way that we account for things, and that's what the difference is. And whoever's on the other side of that conversation, they're going to go in and they're going to want to verify that what you're saying is correct. I promise you. So that's the first problem. Here's the second problem. You're probably saying, well, if I do this for books, but then I also do this for tax, then I don't have a problem, right? Because now my books and my tax return match. Okay, cool. Valid point. However, what if you have customers who are sending you 1099s? So they're reporting that to the IRS that match this number. And when the IRS does their matching after you file your tax return and they say, oh, we've got 1099s that equal 3.4 million, but the tax return only says 1.4. Well, now you're going to get a question from the IRS, and I promise, while you may be able to explain it, I promise you it is going to be time-consuming and annoying to answer that question, and you are not going to want to do it. Next question is going to be, well, hey, you just said S-Corp, and S-Corps don't receive 1099s. You're right. S-Corps do not need to receive 1099s from their customers. However, customers go rogue sometimes, and maybe they don't even know that you're an S-Corp, and they're going to send you 1099s anyway, just a CYA. Seen it all the time. I mean, I've got customers who send me 1099s, and I'm an S-Corp. So it happens, I promise. And now, what you might be saying is, all right, cool, I got it. I want my books, my tax return to match. I understand why the tax return should really say this as opposed to this. Cool. Well, what exactly are pass-through expenses? Well, a couple of good examples would be paid media, or maybe collateral that you buy from a third party that you are providing or facilitating and providing to your customer. Really good example, like banners, things that get designed, like maybe even as simple as business cards, things like that. Next question, how is this going to impact my valuation? Really shouldn't. Your valuation really should be based on this, and this number is exactly the same no matter what you do. At the end of the day, somebody's going to acquire your business for the cash flow that that business, or the potential cash flow that that business can provide. The cash flow, the net numerical number, is the same in both scenarios. It really shouldn't impact your valuation. Next question is, well, the margins are going to be different. Yes, you're right. That's a good point. Under this first example, the margin is going to be net margin, $910,000 divided by 3.4 million. It's going to be 27%. Under this example, it's $910,000 divided by 1.4 million. And that's going to be 65%. Those are vastly different. The number is still the same, though. Number is still the same as from a dollar perspective. So to wrap all of this up, this is the way that we account for it. Reason being, we want the books to match the tax return. Reason being, we don't want to create an issue with the IRS, and we also don't want the agency owner and the tax preparer to have to do mental gymnastics to get from the books to the tax return. Next thing, really, we view this total revenue number, it's really a vanity metric. It doesn't really mean anything. What really means something is your net income, what the business is kicking off and what it is generating so that you can go pay your mortgage, you can go pay your people, you can grow the business. This is really the number that's important. How you get there, not as important, and really the total revenue number is a vanity metric in our view. So that's it for today. Hope to see you in another video.